Guys, what's going on? My name is Ryan. I trade ETFs, and I like to make videos to show some of the technical analysis that I'm seeing in the market. So we've got XLK representing the Technology Spider Fund, and let's get started in some of the technical analysis. So starting right here on the weekly, we can see that we have had and held this long term all the way back to 2009, this long-term channel. It's acted as very strong support and resistance. Here on the weekly, you can see that we have a high here, support, resistance, support, and then we actually started this new channel upwards. I could draw a bit of a channel going right like this, which I think I do on lower time frames. However, this is significant because from a technical analysis perspective, breaking out of this channel and rising even higher represents kind of an unsustainable uptrend. So I wanted to take a quick second. I mentioned this here in my previous video for technology last week, but again, here on the weekly, we have XLK. And let's just go to two different stocks, Microsoft and Apple, and look at what's going on for their stocks. So here for Microsoft, we see kind of a similar pattern as we saw in the XLK. And what I noticed somebody post, and I thought it was very interesting, is that if we drag it from the high back here in about 1994, we have this is about the full move right here, and then we drop down very steeply and we come into this kind of bottoming pattern before we go higher. But if we clone this line and we drag it over here to the low, you can see that this is about the exact same distance from this low right here to this high, from this low to this current high that we're at right now. So we're at very extended levels. Next up, let's go to Apple, which I think is even more of an interesting chart. So Apple here on the weekly, if you look at this channel, again, this goes all the way back into the mid-2000s, and you can see that there's this pretty clear upwards channel. Apple has been a darling. It's been a great long-term investment for a long time. However, we've seen some weakness in it in this last week, and it's spooking a lot of people, and it's spooking me too. So we can see that if you accept this channel, and I think it's fairly hard to deny it, again, this is on the weekly, we can see that we come up here and we get rejected off of this resistance level. We come back down. This is our support line. We come back up, rejected off of this resistance, support, and then we have basically this channel up here, and it looks like we were rejected a third time fairly hard off of this resistance level. And right now we are only being supported right here by this channel that's been going up. And if we take a look at the historic price action after we get rejected, it's a pretty steep fall all the way down to the bottom of this channel. It's not a straight shot down. Right now, we're basically doing like what we did here in 2015. We're breaking down, but I'm sure that there's going to be plenty of trading opportunities here in this stock, like we have right here. And then when we break down for real, we come back up here. It's not just a straight shot down always. It was pretty much over here, but over here I can see us getting support, which it looks like we are right now here at the bottom of this channel that I've drawn, which starts basically here in mid-2016. So these are two stock charts which are heavily weighted in the technology sector, and I just think it's interesting to keep these large cap stocks in mind when looking at ETFs like XLK, because it makes up a large amount of their portfolio. So here on the daily, I have this major support line here drawn from late 2016, and it looks like we found support at this level multiple times from then to today's date. So we found support here once, twice, three times, and a support level to watch would be here for a fifth time, or for a fourth time, right around this level. Beyond that, it looks like we've been in this channel right now. I have this marked in unbolded black lines. We got rejected up here at the top. We came down and was supported here at the bottom of this channel. As far as divergences go, our RSI makes a high here and a lower high over here. This is a divergence because price makes a high and a higher high. And let's go to the 2-hour time frame. On the 2-hour time frame, I have a handful of Fibonacci levels right here. I wouldn't give too much weight to them. They are not all that important and may confuse a handful of people. So let's get rid of that one. But if you do like Fibonacci, which I guess I do, I drew it from the start of this trend right here. This marks our 0 point all the way up here. This is our 100 level. And it looks like we're getting supported right here by our 78.6% Fibonacci level. This also represents an area of mild consolidation in the past. However, the 61.8 marks a far more consolidated area of support for price, and it would go in line with our previous support line, which comes out about over here in the $54 range. So I have this target right here drawn in this purple box. This is my target for the price of XLK, the technology sector. I've been bearish for a couple weeks now. I started getting bearish around here at the A right here, and I was wrong for about 2 weeks, and now I think that we're finally starting to see some stuff play out, which I was seeing. But on the 2-hour, we had this wedge pattern going on here. We came up and we set our A, B, C, D. We came up and hit our E right at the apex of this ascending wedge, and we're starting to come into kind of a descending triangle pattern. However, I have a much more in-depth analysis on the descending triangle pattern in lower time frames. On the 1-hour, again, we can see this descending triangle right here. And one interesting thing, if you do use Fibonacci levels, which I do, is to always look for confluence. And confluence is when two different Fibonacci lines coincide. So right here, we can see that we're being supported by the 78.6 as well as the 50% right here. So these are too tight together. You see that no other Fibonacci lines here are that close together. So this right here marks a major point in the sand that bulls and bears are battling over right now. And keep this in mind when we go to lower time frames, that this is a major point in the sand that we need to hold if technology bulls are to continue higher. And if we break below this, I think that my theory that we will fall down here to the low 50s will come to fruition. Again, this blue line right here is the channel. We broke out above this channel. It would make sense for us to come and touch the top of this channel. So on the 30-minute time frame, we kind of get a picture of this descending triangle that I see going on here. So it is a bearish descending triangle because price falls into the pattern. Price rose up into it. It would be a bullish descending triangle. However, it doesn't. We have this big drop. This marks our support level. And we come up. This is our first resistance line. This is A, B, C, D. And I think we just hit E. But again, this is on a 30-minute time scale, and I have a lot more complex descending triangle pattern that I think we might see play out on the 15-minute. But I have marked here, this is our support line again, this is our resistance line, descending triangle question mark, and the count right here. So if this is legitimate, I can see us breaking lower right away. However, in my opinion, my humble opinion, I guess, this is too short of a pattern to mark a major reversal in XLK. We've had this long, substantial run upwards, and as far as a correction goes, a correction should be the same distance and time downwards as the impulse wave is upwards, if that makes sense. So if this was 2.5 months long, this cannot be, a week. It should be, 2 months, 2.5 months long. So let's go to the 15-minute. So I wanted to preface this next probably 4 or 5 minutes what I'm going to talk about by saying that this is a complete and total shot in the dark. However, I'm starting to see some patterns that are very familiar to me and very familiar to the start of a longer term descending triangle. And it's undeniable, and I decided, just to see how well it fits and take a shot in the dark to see if this will actually play out. Like I said, I'm starting to see the beginning of a descending triangle, and what I said earlier, which was that, you can't have a 2.5 month long uptrend and a week-long downtrend. You need to have a fairly equidistant downtrend to match the uptrend as far as a correction process goes. And a descending triangle right here would make a lot of sense to me for many different reasons. So I want you to take a look at this chart right here, which is pretty textbook as to what a descending triangle should be, as far as basically everything you can think of: support, resistance lines, measured moves, and volume trends, and breakdown points. So I will refer back to this quite a bit, but one thing I think I'm going to start with is that we have descending volume, flat volume, and then descending volume when we break down. And so I have this marked here. I think that we will have descending volume up into the top here, flat volume all the way over here, and then once we start to break down, we're going to see a spike up in volume that will decrease as we move into this pattern further. Notice that these Fibonacci lines are still in effect here. This is our 50%, and these will mark support lines as we head down lower. Another thing, and something that actually tipped me off to this being a descending triangle, is that we have two gaps right here. Notice this, and then this. This is very familiar to the gaps that we see over here in this chart. Next thing I want to talk about is the support resistance line. We can see that once we have our high, we make this kind of bounce pattern right here, and we set an equal low, which I think is happening right now, which would be supported by these two gaps as well as the descending volume that we have. So keeping that in mind, we kind of have this playing out. We've set our lower low. Let's go back to Heikinashi. It's just easier to follow the trend, I guess. So this is our first resistance line marked here, and I drew it over to this point right here, and I can see us moving up to the top here. This would be a measured move down, and this is our first resistance line. Once we get to this point right here, we will have a gap and move up higher, and then we'll get rejected and fall back down. We'll come to retest this previous resistance line. Support becomes resistance, and we'll fall and gap down to this bottom again. We'll set in our A, B, C, D, E, and so this would be B on our chart. We'll see a slight pop, get rejected at this 68% fib line, fall back down, and then rise up higher, which will be right at the apex of this resistance level and this overall resistance level. One thing I think is funny right here is people will call out head and shoulders right here. They'll see, you know, this is the left shoulder, this is the head, this is the right shoulder. And then from right here, you notice that I have this support resistance line drawn. This will be this line right here. And once we hit our apex, I can see us breaking down lower. So I have that drawn here. I have us breaking down lower, coming up to retest this previous support line. It was support here, 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 and now it's resistance. So we'll come up, get hit by resistance, come up or come down, and this is new support. This will be supported by, this is a clone. This is our first pole right here, and I cloned it here at the apex of this point, come down, and it will fall around this area, and then we'll try to make it back up into this trend. This will be E, and then we'll fall back down, and we'll come back and retest this previous support level, now resistance. We'll have a gap, and we will break through the support line at the 38.2% and head to the 23.6%. Again, this is just what it says here. We'll come back up into the trend, set our E, back down to previous support, rejected off of previous support, and then we'll fall even lower. And that's kind of what I got. So I think that we're going to make a full retracement, and I'm just calling my shots early. I can see in the coming days that we will see a dramatic rise in price, and then as far as the overall trend goes, I think that we're going to see a more major long-term correction here in XLK, supported by the topping patterns that we're seeing play out here in Microsoft and Apple, which I mentioned at the beginning of the video. And as far as a measured move goes, we'll draw this initial pole right here from the top resistance line down to our original support, and we'll bring this all the way to the apex point over here, and we'll draw that from the apex, and that'll be our ultimate measured move for the downtrend, and I have that right here. If this is the measured move right here, and this is our apex, I can see us coming all the way down here. That would be the measured move. This will be the measured move here once we set in our A, B, C, D, E. This will be our A from the top here to support, and we'll bring this over here to the breakdown from our resistance down to our support level. This will be our first measured move that we'll see, and this will be the second one. Anyways, that has been my analysis for technology sector XLK. I hope you liked it, and if you got anything from this video, please like and subscribe for weekly updates. It really helps me out a lot. Anyways, good luck in trading technology next week, and happy Father's Day.